Welcome to Subramani. When you are an investor, a small portion of your money has to be kept for this game. I normally don't like you to use the word game, but a small portion of your money, whatever it is, 5%, 10%, an amount of money which you can afford to lose, should be kept for picking up some stocks where you start playing the game before the world starts playing the game. For example, for me in the 90s, I used to look for dividend yield. So one share which gave good dividend yield was Apollo Hospital. Apollo Hospital did not have a great reputation. They had some, I think, Om Sinduri hotels with them. Then they had the bouquet shops, and the medical shops were kept in a separate company. So not really known well for governance. And I'm anyway very skeptical of companies which are based out of Hyderabad. This company was based out of Chennai, but still I was very skeptical about it. But I bought it simply because it was giving good dividend yields. So I bought the share at 9 rupees. And I used to get 10% dividend, which means I got 1 rupee as dividend. So I was very happy with 1 rupee return on 9 rupees capital. So that is the reason why I bought this. And this was, when I bought this, nobody was buying it, and people would say, how can you make money out of medical profession, etc., etc. And but I was convinced that it would make money for me, and I had proof because it was paying me dividends. It paid dividends, I think, almost regularly. But when it reached a price of 135, I said, this is over, the dividend story is over. So I sold off. Then I bought again at 350 or 400, then held till 700, and I thought this was the peak. Then I sold out. Then I again bought at 900 or 1000, and I thought it was terribly overpriced at 2000, but I held on. I said, I've sold this in the past, so I'll hold on. So now I think the price is something like upwards of 5000. Why am I saying this? It's because once a company reaches a particular size and everybody knows about it, and it is in the portfolio of everybody, you then can't make much money. So you have to start very early. So an early start helps, but you have to have conviction in holding on to the share for a very long period of time. Another share which I have held like this since 1986 with very regular trading is Cholamandalam Investments. So my cost of Cholamandalam Investments must be, or Cholamandalam Investment and Finance, because there's another company called Cholamandalam Holdings, which is a newer company. So I'm talking of the investment and finance company, the NBFC. I have held this from 1986, and I have traded in, traded out, sold at very high prices, bought at very low prices, right? This is one of those shares which I sold in the 2007 boom, 2003 to 2007 boom. Then there was a fallout with DBS, so that was a time when the share was worth buying. So I've done all kinds of things with this share. So remember, you can do this with a part of your portfolio, but this portfolio should have some rules. You start playing the game in that early stage. So I bought Indigo, I bought Zomato, but Zomato I bought only after the fall, because when people were starting to write off all these .coms, oh, Nykaa will never make money, Paytm will never make money, Zomato will never make money, and everybody was skeptical. And Ashwath Damodaran had said this price, it deserves a price less than 50 rupees. I entered around that price of 51, 52, and I'm happy I have not sold a single share. I've just kept adding. Similarly, I bought Indigo at 800 when the world was not looking, right? So you have to have that start at a time when nobody is looking. This is step number 1. Step number 2, you only invest that much money which you can afford to lose. This is not your typical equity allocation. From your equity allocation, you are taking something out, right? So for you, it could be 5,000, for 50,000, 5 lakhs, 50 lakhs, 5 crores, depending on the size of your portfolio. So this has to be money which you are willing to let go, simply because when you buy shares at these low prices, somebody may come in, who wants to buy will keep telling you stories of how it's a good sell. I remember I have perhaps even mentioned in one of my videos about somebody asking me to sell Coal India at 210, saying it's a very high risk, ESG, etc., etc. And I was laughing myself to the bank, saying, okay, what about the dividends? And now the price is 300 plus. and I heard that this guy wanted to buy the shares at 200, and therefore he was creating reports saying it's worth selling, right? So these kind of noise reports will also happen. So knowing that you will stick through, knowing that the management is good because you have read about it, met them, or you find some other mutual fund willing to take a stake in them, you're putting a small amount of money in it for investing. So that's also important, because if you were to put a big amount of money, then you would not be able to you will not be able to stick around with it. Don't also confuse skill with luck. Very quick immediate jumps might mean a fantastic time to get out. So let's say you buy 10,000 shares of a company, or say 25,000 shares of a company at 9 rupees, and it goes to 18 within a month. At least 80% of it should be sold off, because you will always get a chance to buy more. The market never goes in a one-way street like this. But beware, there could be stories which are planted, stories which are real. It's your ability to make the distinction between them. I've been holding on to one absolute penny stock called Deccan Gold. Deccan Gold is not really a penny stock, because it's a 1 rupee stock, and I had bought it at 6 rupees maybe 10 years ago. I'm not even very sure. I bought, I sold, I got the rights, I got much more than what I would have got, but what I was eligible for. So as soon as I got it, I sold off. I kept reducing my cost. I'm still holding a substantial amount of share of this company, and the price now is, I think, about 130 or something like that. So these shares will fluctuate, will give you sleepless nights, and only when you buy a reasonable amount, since you're putting money only at 8 rupees or 9 rupees or 7 rupees and the world is not looking at it, you need to put something like 1 or 2 lakh shares. So it's about 14-15 lakhs for, depending on the size of your portfolio. Simply because at every stage you will be tempted to sell. You don't know about the future of the industry, about the quality of the promoters. Nothing is known. It is being discovered by the market. I keep saying, why did I sell HDFC? Because from 1978 to maybe 1988 or 89 or 95, it took me a long time to understand that this is a good solid company and you should stick to it. It is not, the conviction does not come on day one, right? Then don't confuse your skill with luck. Sometimes you get very lucky. You buy a share and it goes up. Best is to sell off. I bought Suzlon at 7 rupees or 8 rupees, and then I always thought it was a good company because I trusted Tulsi Tanti, God bless his soul, is no longer there, but that company never did well, and then I got rid, and then I got again at $8 or $7, and I said, I'm not selling this because I think it's got good potential. And then people started writing about it. I was still not sure about those journalists. I have no clue why they were writing, and so I was skeptical, but I said the amount at stake is so small that I will hold on, and today I think it's 30 plus, right? So this is important. Also, if you're going to use the help of some advisor, because there are people who will create a vulture portfolio for you, etc. So you have to then start judging that person over 4 or 5 year periods, and also decide that yes, it's a fantastic thing which he or she is doing, but the return that I get has to justify the cost that I pay. So there are too many people today offering you fantastic products at very high cost, and you have no clue how it will work out. So unless the payout is based on success, such things should not be trusted. And please understand, even when it is based on success, if that person has no skin in the game, that is again a very bad signal of going with somebody else's conviction. You may not be able to do that. So I have to build my own conviction. For example, when I bought Indigo at 800 rupees, 900 rupees, I sold, I bought, I did all that. That was a time when Buffett was saying don't buy airlines. Then he bought airlines himself, then he made losses and he got out. So it requires conviction to sit through such periods of time when you personally may not have enough conviction. Thank you.